Of course, one of the reasons why everyone is talking about Robinhood stock is its position in the cryptocurrency industry and the increase in features it's adding to crypto trading and all kinds of speculative trading in general. So, in this video, I'm going to dig deeper and look at what management said about the new products and features it's rolling out and what its clients show in terms of what they value in this trading activity that they're engaging in on the Robinhood platform.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So, in their latest earnings call with Wall Street analysts, the Robinhood management team announced some new features that customers are enjoying. For instance, now customers can select up to 3 times leverage, but in the future, they plan to expand the options for more advanced customers. And this is in relation to trading Ethereum, the cryptocurrency ETH. So, not only is Ethereum already a very risky asset, and I hesitate to even call it an asset. But on top of that, you're using 3 times leverage on the asset. So when Ethereum goes up by 1%, if you own this 3x leverage investment, your investment will go up by 3%. So you're multiplying the change in price with this leverage. So if it goes up 10%, you gain 30%. If it goes down 10%, you lose 30%. So it's making an already risky asset in Ethereum even more risky with the 3x leverage. But as I've been saying, the traders on the Robinhood platform are more risk seeking in general compared to other trading platforms. You'll find that their customers are more attracted to these kinds of features proportionally compared to other trading firms. They're also talking about how you can easily choose to trade on margin across all your positions or just isolate it with a single type. Now, I've been saying for years I would not recommend investors to use margin. And let me explain what margin is. Margin is taking your $500 that you might deposit on an investing platform and being able to buy, let's say, $2,000 worth of stocks, taking $500 and buying $2,000 worth of stocks. So that $1,500 would be margin, borrowed money. So again, you're making a situation even more risky because if that, let's say you make a $2,000 investment and that investment declines in price by more than $500, you would be underwater on that investment, meaning you only put up $500 in capital and that $500 has been wiped away. And now you owe more on that asset than you own in equity on that asset, which then the trading platform could force you to sell your stake in order to cover the margin. It puts you in a risky position because you might have to sell the asset before you want to sell, or you might have to sell the asset while you're down on the asset. So, again, I would highly advise against these two instruments. The leveraged instruments, I would advise investors against using these. And then the margin, I would also advise investors against using these. I think these are valuable instruments to the investing community. In general, I like having more options, more tools available to investors for so they can utilize various strategies. But I don't think that non-professional investors should be utilizing these because I don't think you can understand them completely enough to utilize them effectively. And what I mean by understand them is understand all the risks associated with these types of instruments and all the fees associated with these types of instruments and how it can impact your investment returns in the long run. So that's why I typically advise investors against using these instruments. Robinhood is also making available a stop loss feature. So you can set up a profit and loss on the order. So you can track the price of Ethereum in real time and decide when to take profit by moving the slider and easily set up a stop loss to help protect your capital. let's say below 5% or maybe 8%. And these are also instruments I would advise investors against using. Stop loss order is aimed at um, selling your investment at a certain price point. So let's say you have a stock right now that is trading at $11 a share and you don't want to hold it anything below $8 a share. And so you set up a stop loss order so that if it goes down to $8, you sell your investment. Again, these tools are helpful as long as you fully realize and understand how to utilize them and understand the fees associated and the cost associated and the risk versus return associated with these types of tools. But I wouldn't advise most investors to utilize these. I understand Robinhood making them available because the whole strategy from Robinhood is to increase engagement from investors. They want you to make more moves, right? They want you to make more decisions. The more decisions you make, the more you engage with the platform, the more likely it is that Robinhood makes more money from your decisions, whether it's a buy or a sell or a stop loss order or whatever it might be. Every time you engage in a move on the Robinhood platform, that's an opportunity for Robinhood to generate revenue and profits. So they want to encourage you to interact more frequently. However, I found that long term investing success is the opposite. It's engaging less frequently, making fewer trades, making bigger decisions, but fewer decisions, and buying and holding your investments for longer time periods without using these fancy instruments like futures and stop loss orders and leverage and margin and options, all of that unnecessary for long term investing success, but very necessary for Robinhood's bottom line and profitability. So they will try and encourage this onto users on the platform so that you can interact more frequently. They don't really care whether you're buying or selling, as long as you're transacting. That benefits the Robinhood platform. And so this again is another way for them to make you engage more frequently. Again, saying that they made it possible for you to easily change your stop loss with just a swipe of a finger. And many of these recent innovations I evaluated from Robinhood are trending of in similar direction and making it easier to interact, trade more frequently on the platform and encourage more trading activity, which again negatively correlated with long-term investing success. You can read up on all the studies, and most studies will show that it's inversely proportional to your long-term wealth creation. The more frequently you transact, the less likely you're to increase your wealth in the long term, and vice versa. They're inversely correlated. Fewer transactions usually lead to better longer term success. Again, my general investing strategy for investors that want to generate long term wealth is to set up an investing plan where you allocate money to your investments every 2 weeks or every month or every quarter at the very latest, and you add money to your savings and investment. Let's say it's $500 every 2 weeks, and you allocate that capital and you spread it across the stocks that you want to own, whether it's 5 stocks or 10 stocks or 20 stocks. You add to them every 2 weeks or every month or every quarter, and you don't try to time the market and you don't try to speculate on short term fluctuations in prices. You buy investments that you're confident in the company's long term success and they're selling at reasonable valuations today. You buy them today and you hold them for the long term. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.